Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week that we finished November and we started yesterday, Friday, with the first day of December. So this week has been a roller coaster of pretty decent news, and I think the markets reacted properly. We got good news from the PCE, and we are still seeing Powell maintaining the door open for further interest rates, but I think markets are ahead of the game, saying basically that interest rate cuts are going to be sooner than later. And market ran a lot. So as always, we are going to review the fundamental data importantly during the week and also perform technical analysis with that fundamental analysis on the background to really understand what happened and why that happened. And today I'm going to cover in detail a lot of nuances from Thursday to Friday price action. If you like technical analysis, you are going to love that one. So stay tuned. Remember that I always put the timeframes and the details for each of the captions of the chapters of the video down below on the description. So if you want to skip ahead to any kind of section of this video that is quite long, go ahead, feel free to just go to wherever you are interested in. And if you want to see more than technical analysis, more than fundamental analysis, if you want to see any specific, please comment down below and I will try to incorporate that, include that in upcoming videos. So let's now start with the fundamental analysis. Monday, nothing huge. Lagarde, as you can see, I'm keeping European zone, European area fundamental because at some point, the index, the UK 100, also affected by the European zone. US is also sensitive to that kind of information. So at some point this week, I'm going to highlight that some information from Europe also affected US markets. So Principal Lagarde speech, nothing burger, new home sales, look at this, month over month, minus 5.6%. Home sales really plummeting, also due to the 30-year mortgage interest of 7.4%. Tuesday, a lot of Fed talking. Look at this, Barr, Bowman, Waller, Goldsby, everyone was saying that we need more information. And they are not talking about interest rate cuts. So Tuesday we got nothing. Everyone was waiting for Wednesday and GDP. First, we got the 30-year mortgage still decreasing a little bit, but 7.37. This is really affecting the home sales number on Monday and a lot of other things. So the home sector is really feeling the pain right now. So GDP growth rate estimate 5.2. Really skyrocketing. We were expecting from 2.1 to 5, big increase, and we were farther than expectation, higher than expectations. 5.2% is unbelievable. Price index 3.5, same as expected. Remember that these are estimates, but still market didn't like this growth because growth means inflation and inflation means higher interest rates. So higher GDP growth than expected was really bad for the market. That's on Wednesday. On Thursday, that's why I kept this European fundamental inflation rate year over year on Europe, 2.4%, lower than expected, and core inflation rate 3.6, lower than expected. This was really big news that caused the market on Europe, including United Kingdom index, UK 100 that I follow for the London Open, skyrocketing higher. That bullish sentiment, I was waiting for PCE in the US to really follow that, because when Europe and UK are bullish, if we have decent information on US, that really skyrockets the sentiment and you can really see big moves to the upside when every continent is aligned on the sentiment. On US, we got PCE, core PCE price index, same as expected, 0.2. a little bit lower than the previous one. And the PCE, let me check, the PCE, the general one, month over month, flat. And year over year, 3%, almost as expected. We are going to see on the charts how this affected the prices, the price action. Fed Williams started talking that maybe they are seeing progress on inflation. So as you can see on Thursday, we got a little bit of dip, and then the details that I want to cover today, really important for you, we got a big spike, late spike into the close on Thursday. That is key to really understand what happened on Friday. Friday, we got S&P manufacturing PMI still below 50. That means contraction, 49.4 as expected. ISM manufacturing PMI, same as the previous one, a little bit lower than expected. And then we got Chair Powell's speech. Until Fed Chair Powell's speech, everything was quite bullish on the internals. I got some indicators that were showing accumulation on the lows. That's why when Chair Powell started talking, okay, interest rate cuts, cutting rates, it's a discussion, premature discussion. He doesn't want to enter yet, but markets know. Markets know that the data is good, PCE is good, inflation in Europe is also good. So basically, even though they are saying that it would be premature to conclude with confidence that we've achieved sufficiently restricted stance, if we check the FOMC Fed Watch tool, I think the markets, investors, analysts, everyone is saying we are going to start cutting rates as soon as March. Look at this. We are here, and the first interest rate cut is here. 1, 2, 3, 4, and the first time this week, 5 cuts to reach 4.25. Look at this, also increasing another rate hike. So we are more than 1% lower on interest rates for next year, even talking about 1.50. That would be 1.25, and reaching 375 would be 1.50. So as you can see, markets are really, really ahead of themselves talking about cuts. That's the expectation, and that's what the data suggests. But you have your bias on the fundamental analysis, you have your analysis, your opinions, but then there's price action. This is the monthly chart on the Nasdaq. Look at this fat candle on November. Huge, huge. We got our big push from early March, our pullback, and then the first big candle of a supposedly bull flag. Let's not talk retail. Let's talk about order flow, because order flow is what moves the market. We talk a lot about this push bouncing from the 200 moving average and really expanding. Look at this expansion. This expansion was brutal. On the weekly recap here, on early November, I told you about 16,000. We are already at 16,100 and something, but it was quite clear that big money was accumulating. But let's talk about the nuances here, the gaps that we are leaving behind. Before moving to the daily, the weekly is also pretty important. I have my charts. This blue dot line is the weekly range, the previous one, this little candle. We are now on an inside candle on the weekly also. So we are holding both ranges, expanding a little bit on top, but on the daily, it's where you can find the really the sauce of what is happening. This is another block, and this is another block. Bullish order blocks. Look at these two big fat green candles. And then we have our weekly fair value gap and the daily fair value gap, that is this one. So don't forget about these order blocks in the future. Right now we are above those, we are above that daily, but I'm really watching this daily fair value gap as much as possible. When we go top to bottom analysis, 4-hour chart shows you something really interesting. We got the daily fair value gap and we got also the 4-hour chart, the 4-hour fair value gap expanding. The more gray, the more interesting is this zone. And look at this liquidity down here. I thought we were going to really push lower and bounce. That didn't happen. And that's why this week I was not that aggressive. If we were to take this and bounce, oh boy, we are going to skyrocket. That liquidity remains down here, and that's something that I have to take in mind every day for next week. And as you can see, there's a 4-hour fair value gap down here, and also an order block down here that we tapped on Thursday. Let's go down to the 1 hour and really see this tap, because when everyone was really screaming the end of the day, the end of the world down here on Thursday, check my video on Thursday because I was long down here in the 4-hour fair value gap. And if we go to the 30-minute chart, we can see that we took this liquidity, we bounced, and we put a delayed spike that I was mentioning earlier. This is the chart that I have for Friday. That's why I'm still keeping this sell side liquidity down here. But let's talk about Thursday, because Thursday, the open on Thursday was coming from Wednesday bearish price action. We have a 4-hour fair value gap here. We didn't tap this, but the short was unbelievable. If we go to the 5-minute chart on Thursday, we can see the magic of this accumulation down here and the late spike that I was mentioning. Look at the ES. This is the same analysis on the ES. Look at the spike. The spike did break high of days on Thursday, and they put an order block here. I got it here, and they put two massive liquidity runs. Look at this. Look at all this sell side liquidity that was coming from previous days on the week that they took and they pushed everyone out. That's why I was so bullish on Friday. Nasdaq is obviously weaker than the ES, but the ES was skyrocketing and was super strong on the lows on Friday. Take that into account, because we are going to continue seeing that kind of details that conform your bias for Friday. So let's continue on Friday. The setup on Friday was this 4-hour fair value gap that we got also. I think I lost that one. Yeah, I got the 1 hour. Let's analyze the 1 hour. This is the late spike on Thursday. We got the 1 hour fair value gap on Friday, and this liquidity up here. So as always, what I'm waiting for them to run the lows, to grab liquidity down here, and to push for the liquidity on the other hand. If that holds, oh boy, those longs are juicy. 30-minute chart, 15-minute chart. This is the overnight on Thursday. We tried to go higher. We took the late spike liquidity and we reversed like crazy. Look at this. Leaving behind a little bit of gaps, but quite efficient on this move. So why not short up here? Where I'm not going to short down here because we didn't take that much liquidity. It's overnight and I'm waiting for regular trading hours to take those shorts. But more than that, this liquidity and this liquidity, I was really looking forward to this kind of thing. We didn't take that much, but the 5-minute provide me with this pre-market, this low of day hand, and the other one. Look at this. If we check the 1-minute chart, that's where you can see my trade. I took an early trade up here for that's 1 to 2, 2 to 1 risk reward ratio. It's not super decent. The stop, I wouldn't like the stop here. I put it at the 50% retracement. This is an order block. So I put the stop at halfway of the body. So this long, even though it worked, it was not a super high probability. It was just one contract, but it gave me something. What this trade gave me, they hunted the liquidity up here and they tried to go higher but rejected. Look at all these various fair value gaps that are stacking up here. 30-minute chart had this, the 1-hour chart had this, the 15-minute chart had also a gap, the 5-minute chart, everyone was watching shorts up there, up here. So that's, we got this rejection. This is just noise. And I was watching this low, and as you can see, the sell side liquidity down here. So my trade, as always, this setup, it's always my setup. And if you can put even more technical side, look at this. This is an order block. Big move down, they took liquidity and they rejected. As soon as I saw this, taking liquidity, I took the high on the first 1 minute with the stop up lows. I think it was 2 contracts because it took liquidity, so I was a little bit more confident. And my target was the liquidity up here, this pivot on pre-market. So they go higher. Look at this feed retracement that I put. This is 50, and this is the so-called golden pocket, the 61.8 retracement. During the first pullback, they pulled back on discount 50%, and I added here. It was a 1-minute fair value gap, and we got the inverse, the bearish fair value gap. So this was a zone of, if we bounce here, we are going to really see something happening. So I added that. The stop is this week down here. So my stop for this was a 1 to 4, and this is another 1 to 4 with the stop here. They bounce, and then we got this. This was the waiting before speech. Everyone was freaking out down here when we pulled back. But look at this. This is why technical analysis is so important. Golden pocket bounce, not even touching the order block because all the institutions were already in. I was quite confident at that point. It didn't touch, I didn't move my stops until we started seeing this move. I never moved because we never went through this. It bounced, and then I risked it, I moved my stop, I trailed it, and I got my move up here. And this was, I don't know the amount of, I think it was one, I don't know. You just don't focus on the money. Focus on the beautiful setup that we got, the justification for the technicalities. And after that, we ran through all these fair value gaps, inverse fair value gaps. And look at this. On Friday afternoon, I don't trade. But look at these setups. Fair value gap here, never touched again. Order block, never touch, neither of them touched again. Another order block, another fair value gap. I mean, it was quite the run to really push higher. So why was my target here? It was Friday. We were a little bit bearish. I was confident on the liquidity run, but on Friday afternoon, you don't want to be. I was confident, but you don't want to be naive and think that, oh, I'm going to let it run 100 points. This is more than enough. This is 70 points on 2 contracts and 80 points on 2 contracts. So more than 75 points on 4 contracts. Come on, guys. This is more than enough. You don't want to risk these kind of trades to go just break even. Take profits. At your target. Don't take profits before. This was the trade. Once it touched, I was super happy on the day, on the week, and I'm super bullish on next week. Before moving into forecasts, look at where they stopped. This was the higher time frame inverse fair value gap that we were running into. I'm not super confident on a Friday to really hunt for this, but look at the ES. The ES is crazy. ES got everything out. ES is super bullish. Why? Before moving into individual tech stocks and performing the technical analysis on the daily, as always, let me just show you the small caps. The Russell 2000. Brutal. This was, since the start of the day, this was just going higher and higher and higher and higher. I have a lot of friends trading small caps stocks, and oh boy, they had a nice day. Look at this strength. Even up here, look at these fair value gaps being respected into the close. Look at this daily candle. This is why the ES was so strong. 3% almost on the day for small caps. So the ES really was destroying everyone on the futures contracts. We had an SMT, an inverse correlation. The ES was so strong that even though the Nasdaq was taking liquidity down here, the ES was holding all these weeks. I would like to just see this, but sometimes you are so strong that you don't have to wait. Order block, fair value gap, we never touch the lows and we skyrocket. The same setup on the Nasdaq. The Nasdaq was even better because we took all this liquidity. We never touched this low again. We didn't even touch the order block, even though the volatility with Powell speaking. So this was a A+ setup for me. Now, let's talk about Apple, Microsoft, Tesla. We have to really see everything on perspective. The Magnificent Seven are not super strong all the way. There are some of them that are really struggling, like Tesla and Google, and some others like Amazon and Microsoft that are really all-time highs, basically. So Apple, it's in the range. It's in the range. It's just like that. We have to wait. I'm quite bullish to continue higher now that we are, I think it's 3% from all-time highs. Microsoft, all-time highs, like look at this is unsustainable. I think Microsoft wanted to pull back to just gather some more positions. This is the line of the sand. Let me just grab it. This is one of the lines on the sand for me. What the heck? So basically, I don't want Microsoft to pull back as much as this. We have the 20 daily moving average here. And even though we had a minus 1% on Microsoft, I mean, the Nasdaq also went higher with a little bit of problems, but I mean, Microsoft was just pulling back. Tesla, the Cybertruck disaster. It wanted to go higher, but it went lower. And we are at the low of the range. Be really careful. This gap is juicy. So watch for a little bit of downside and then a bounce. Amazon. Amazon with the Christmas shopping and the consumer spending that we are seeing. Look at these candles. Look at these green candles. Also this red, but this is overridden, but look at these candles. A lot of green, a lot of indecision up here. A little bit of gap, but look at this bottom tail. I mean, Amazon is quite bullish. I'm quite bullish. Google is the one that has a little bit of issues, same as Microsoft, but Microsoft is at all-time highs, just pulling back. Google has issues due to antitrust on Europe. So be careful with that because we filled the gap on the daily and we are putting this, you know the name of that candle, right? This is a gravestone doji. And I don't want to hold Google down here. Below this line, on this hole, I don't know. I don't know with certainty where are we going to pull back. I don't know. So be careful with Google. Nvidia, from all-time highs to basically, this is a nasty move. 8.57% down in 2 weeks. This is obviously due to the regulations on AI from the US. I don't know, guys. I would like to see Nvidia above this level again. Please, above this level, maybe we can see something. Because right now we are just seeing bear flag after bear flag. And Meta also quite weak. It's not above my expectations. I would like for this to bounce. So be careful with these three: Google, Nvidia, and Meta. Now let's talk a little bit about correlations. Dollar has interesting daily. This is a bullish order block. We got a big move, we got a rejection, but we are in between two order blocks. This is a bearish order block and this is a bullish order block. And after all this run, this is the only issue I have for next week. Dollar is divergent with price on the stocks. Strong dollar means weaker stock market. And we are holding the bullish order block and we are below the bearish order block, rejecting that. So I don't know what dollar is going to do. Actually, we got a gap on the 1 minute on Friday. We got this gap. As you can see, it was filled. It was filled. Then we got the order block and we rejected everything. So for one side, you are bearish, but on the other hand, we are bullish because we are holding the bullish order block. So quite difficult to read right now down here. I would say there's room for this demand down here. I think this is demand. I don't think we are going to push that much. So perhaps a little bit more downside on the dollar, but don't expect super red days like this. I think we are near demand zone on the dollar. Another interesting thing, we covered the big daily push on small caps, but look at gold. Gold is at all-time highs, 2095, leaving gaps behind, putting a nice Friday, 1.58%. Why is gold doing this? Gold is basically a safe haven for a lot of money. Looks like there are outflows from dollar to go into gold, but there's also an inflows on small caps and tech stocks into the end of the year. So I don't know exactly why gold is being so bullish when we are not that defensive on others other parts of the market. But what is true is that gold is super strong. Treasuries also put a nice candle. The more the yields pull back, look at this. This is the 2-year yield. Big move to the downside. So markets are not pricing in hikes, are pricing in cuts. That's why the 2-year yield is being destroyed. 3% in the red on Friday. The 10-year yield also pulling back, not that much because we have a strong economy, but anyway, 3% in the red on Friday. So we have a weak dollar, weak yields, strong small caps, strong treasuries, strong gold. That's fueling the market. This is the real highlight and the summary. We covered strong small caps that pushed the ES. Nasdaq got a little bit of choppy, but at the end of the day was super bullish, and everyone is respecting technical analysis. When technical analysis is so respected, it's because on order flow, this trade means that there are entities that are in this play to the upside. That's my message for you today. There are big money involved in this move. The late spike, the hunt to the upside, the hunt to the downside, the late spike on Thursday, the big move on Friday. There's thousands of open interest positive in the Nasdaq and the S&Ps. There's high 17,000 positive delta on Friday. That's a lot of people buying. That's a lot of people interested on these markets. Small caps are really pushing with a lot of strength. Dollar is weak. We have good fundamentals. Anything else? You have all the ingredients for basically, I think we are going to break all-time highs next week. I think the Nasdaq, it's a little bit weaker, but the S&Ps is going, sorry about that mess, I didn't clean the Friday action. I think, let's just go to the 4-hour. If we see this liquidity being taken down here and we got a massive response, consolidation and a massive response, and this is not taken, this is the first target for Monday on the ES. And then we got these two candles for all-time highs. Do you know what that means? When you are so near to all-time highs, when you have so big numbers like 4,700, when you are on the Nasdaq so near to all-time highs, when you have 16,400. I mean, we are bullish on every part of the market. I think if we don't gap down on a nasty way on Monday, if we don't see a big rejection of this move, for example, overall, let me just put a bearish case. If we break this 4-hour fair value gap on Monday, I'm done. Remember this sell side liquidity down here, because we might see something like this that would be insane. But I think we are going to gap up on Monday and continue. And if not on Monday, throughout the week. Let's see what we have ahead of us next week, because that will mark a lot of things. So next week, we got jolts on Tuesday. We have nothing on Monday, so expect continuation to the upside. On Wednesday, we have 30-day mortgage rate and ADP employment. Thursday, nothing, jobless claims, and Friday, non-farm payrolls and unemployment rate. So I think throughout the week, we are going to be bullish until Friday. And if Friday comes good, we are going to fly. And I think that's all. We covered a lot of things. I really recommend you seeing all these videos. I put a lot of effort. I analyze every part of the market, from fundamental to technical side, from my trade setups, every market that I follow in order to understand the sentiment, the bias on the markets. That's how you trade. And I would like you to trade the same way. That's why I'm sharing this every week and every day with my market recap. So I hope these videos are useful. So if you found these kind of videos useful, please, as always, give it a like, subscribe to the channel, because I would like to continue doing this. I would like you to support the channel, to be with me, to build a community for this kind of thing that is trading. That's a game, that's a life change game. So thank you for the support. Thank you for seeing these videos. And I hope you had an amazing trading week. It was difficult to trade, but as you can see, you can really put all the pieces together and you can really understand how this market is behaving and how you have to trade this market. So as always, remember that discipline and risk management are key for success. Stay safe, everyone. Have a nice weekend and see you on Monday.